record it. Let me record this. So let me start from the beginning. Let me start from the beginning now. How to flip. So this is how you flip. So now, first identify the trend of the market. What's the current trend of the market? Let's look at the 5 minutes market. We are having this. We're having this higher high, higher low. Then we have this internal structure. Then we have this higher high again, higher low. Then we have this internal structure. Then it broke structure to the upside. So basically, it was an uptrend before, change character. Before it changed character. So this is the recent break of structure here. This is the recent break of structure in the market. So after the recent break of structure, price action came down, then take out this low, the higher low, the swing low, which now gives us a change of character. So after a change of character, we should be expecting a sell on gold. So now a sell from the OB or the fair value gap. So this is the fair value gap here. We've identified our trend. Now we're in a downtrend. So now I want to identify the supply zone. In the downtrend, you identify the supply zone. So that identify the supply zone, you first identify your fair value gap, which is this. Then the candlestick before your fair value gap is your order block. It can be blue, it can be black, anyone. But the candlestick before your fair value gap, which is this, your order block. So as you can see, as soon as prices come into your order block like this, where you would have entered a trade. Enter a trade here. Your stop loss would be above here.
Yeah, sure.
Let's say you are targeting this swing. Let's say we just keep coming down like this, came down to this level. You are targeting this last low here, the last swing low. This is the last swing low. This last swing low before this one. You are targeting this last swing low. So you put it out, you mark it out like this. Then you go to, don't forget this is the 5 minute time frame. My forex book position calculator. My forex book position calculator, then you click on it, then you press go calculate it. So you already know how to calculate your lot size. Just
Yes, calculating, okay, calculating the lot size of gold and other currencies, they are different actually. Abi.
yeah, it's kind of different. Yeah, it's kind of different.
Yes, I don't know how to calculate the lot size of gold. And this
Kind
guy, he doesn't trade gold.
kind of
And
different.
my doesn't trade gold.
So now the pip, to know the pip on gold is just like I said it this morning in the class. It's just the first two digits together. You might remove the last one, which is 15. So this 1.5 is 15 pips. So your account size, let's say you want to flip with $100, you put $100 here. Your risk reward ratio, it must be 100%. You are risking all the capital, so 100% of the capital. The stop loss is what I just mentioned, that 51.5 is what you are going to put here. 15
All
pips.
right.
Lot size start from 0.01, not 0.001. So you have to remove all zero and put 0.01. So it's just that simple.
Okay.
And you press calculate. And before you start, make sure your leverage is at least 1:2000. 1:2000 must be your lot size. So now, if you want
Okay.
to, so this is the lot size, I mean your leverage rather, must be 1:2000. So this is the lot size you are given that you must enter. So this is one ratio, this is 0.67 lot. So you can either enter 0.67 soon as price gets there, either 0.67 or you enter 0.02 or 0.05 or 0.03, anyone. Just make sure it completes that 0.67. Do you understand?
Yes.
Just make sure you complete that. You can enter 0.02, 0.67 times, make it 0.67 or 0.05 to make it 0.67 times. So once you
All
open
right.
it, as soon as you get to this level, this is how you start entering more position. So now that it has got to this level, if you haven't taken this trade uh, without adding more position, this will give you how many? This will give you one. This will give you one four one thousand $1,400.
Yeah.
This will give you $1,400 without because you've used 100% of your capital. So you are risking basically you are risking 100 to make the 14, which is what
One
I
for.
thought is 1 ratio for. I didn't want to make
Yeah.
4. So once it has got to this level, you have got to make your 1.4. Now have more, like start having like $2,000, $5,000. This is how you do it. So now, as soon as price got to this level, you can see start creating liquidity. I advise you not to enter position around this level. It's really risky because price can still do something like this, take out this liquidity and keep selling. So it's really risky entering with if market is creating this trend line liquidity. I've explained what trend line liquidity is.
Yeah.
You can see this trend line. It's kind of risky. So after that, just leave the market should play out. Start marking out all the start marking out the fair value gap you see in the market and the order block. So I can see this fair value gap here. Price action has mitigated that one. So let's take it out. You can see this recent one here, price action has not mitigated it. You can see this one here, price action has not mitigated it. Soon as price is not selling. So this way you know is your Fibonacci tool. In a downtrend, I say your Fibonacci tool is from your swing high to your swing low. Now price has come down and break this low. So you already have a break of structure in this market like this. You already have
Okay.
a break of structure in this market like this. Hold on a second. You already have a break of structure. Don't forget we are still in this trade. Yeah, this trade is still running, giving us a lot of crazy ass speed. Are still running down. So now, this way you know your Fibonacci. After price has broken structure, use your Fibonacci to see where you enter more position. Use your Fibonacci from the swing high to the swing low. This is the lowest point I got to. So in the Fibonacci, price
Okay.
often respect the 0.5 to 0.6 level. This 0.5 to 0.6 level, I mentioned in our last class, this is the golden level in Fibonacci that price often respects. If this is your Fibonacci from here to here, price often respects this 0.5 to 0.6 level like this.
I can
This
hear
level
you.
price is to respect it. Out of 10 times, respect it like 8 times. Out of 10 times. So it's a very, very strong tool I used to use. Like used to give me that comfortability in the market. So soon as price has gotten to this 0.5 to 0.6 level, this is where you enter another position. So you calculate it again. Your stop loss will be above the 0.6 level. Make sure it's above the 0.6 level. Then you target this low like this. Then you target the low. Then you go again, you calculate your lot size. This time you can use like just 70%. Okay, your capital is 100. You can just use like 70%. This class will soon finish. Your capital is 100. You can just use like 70%, 70%, and your stop loss. Stop loss still have same stop loss you here, which is
I can hear
2.8,
you.
which is 28. Yes, I can hear you. Which is 28
Hello.
stop loss. What do you say? I can't hear you. So this is 28. I can't hear you. I can't hear you. This is 28 pip stop loss. Then you just press calculate.
Yeah, I can hear you. I can hear you.
Okay, so you just press calculate and you can, this now when
But
you add,
I don't see the screen.
you can't see the screen.
Yeah, my internet.
What do you say?
I think the Wi-Fi is slow this evening. I don't know why.
Can you see my screen
MTN.
now? Can you see it now? Yeah? Are you there? Your service is not good at all. Let me just quickly explain it. So soon
Yeah,
as
I
you
can
got
see the screen now. I can see the
as
screen.
soon as you got in this 0.25, that's like soon as you get to this 0.5 level, you enter at 0.02 to complete that 0.25, or you can also enter 0.25, whichever one you want. So that's why you enter the
I
more
can hear
position.
you.
Can you hear me like this? I can hear you. Your network there is not good.
Okay. Yeah, you said I'll enter as well.
What do you say?
You say, how do I use the Fibonacci? The Fibonacci to
Fibonacci,
determine
use
my
your
entry.
Fibonacci from in a downtrend. Use it from the swing high to the swing low. In a downtrend, from the swing high, the lower high or swing high to the swing low. To the swing low. So price often respect this 4.5 level, 2.6 level. This is where price respect in most cases. Most times, this is where price is to respect. That's the downtrend. And an uptrend, use it from the swing low to the swing high. Swing low, swing high. Same thing again, price often respect this 0.5 to 2.6 level. Most cases, come to 0.5 to 2.6 level, then keep buying. Do you understand? Do you understand?
You said I'm just the screen just came back on now.
What is it?
See, the screen just came back on now, so I'm just
Okay.
seeing the
Okay,
stuff.
from the downtrend, use it from the swing high to the swing low. You put the 0 year, I mean the 1 year and the 0 year like this, and the down you put that the swing low here like this. So I say price often respect the golden
Okay.
level, which is 0.5 to 0.6 level. This is where prices should respect in most cases. So this is where you
Okay.
enter more position. And for the uptrend, you put it from the swing low to the swing high. So this is the swing low to the swing high, swing low here to the swing high. So I said price often respect this golden level. So price will come and tap into the golden level, then keep buying. Do you understand?
Okay.
Do you understand?
Yes, yeah, I understand.
So that's the
My
same
my
thing.
Fibonacci is just, I think it's around 0.7, 0.8.
It's 0.5 to 0.6 to respect most of it. And check it. Most of the time, 2.5 to 0.6. So you can see this is the downtrend. That's why I did from this swing
Okay.
high to this swing low. This is the lowest point to go to. Went to selling, then came here, then started retracing. You can see with respect to 2.5 to 0.7. Then that's where you enter more position. So if you've entered another 50%, 70% of your capital here, at least you'll be having nothing less than 2.5 in this trade, nothing less than 2.5 in this trade. So that's how you'd have just gotten 100,
Okay. I understand.
whatever, probably. But in this trade, not at least the smallest you get is 2.5 in this trade if you just take it. But that's just the rule. That's just the rule. Not just follow it because this one is like 1:5 and this one is like 1:13 or so. I mean, it's 11. I think it's 11. Yeah, I think it's 11 or something. We're targeting this next swing low. This next swing low. So I think somewhere here. So you see 1:12, and this one is giving us a 1 ratio. That's 12 plus that many 5. That's like 17 plus all the lot side to be added. So you see you'd have already gotten a huge amount in the trade.
Yeah,
You understand?
yeah, I understand.
So that's how to take it. Just make sure you enter at the golden level of Fibonacci. Once price start retracing, that's what I use to enter more position.
So
So
you
there,
first of all, before you enter, you first of all calculate the lot size
yeah,
first.
it first calculates 100% of the capital to give you the lot size.
Can you hear me?
Yeah, I can hear you. I can hear you. Hello.
Yeah, I say you calculate the lot size first,
Yeah,
then
you make
enter
it
for
100%. Yeah,
the first place that price
yeah, the
retraces
entry
to.
that you're expecting. Yeah,
Can you hear me?
yeah. Can you hear me?
Yeah, yeah, I can hear you. Okay, that means you only enter this trade two times.
Yeah. You can
Okay.
enter 2 times, or there are some areas you can also enter. If you see some fair value gap area, the internal structure, you can enter as well. So that's you first need to first learn this one. That's the basic you first need to first understand. Once you understand the basic, you can now move down that one. Like now, this fair value gap like this, there's a fair value gap here. As when this price came into it like this and tap it, you can still enter more position. As when it came into it and tap it, you can still enter more position. Do you understand? Are you there? Are you there? Oh, your network is not good. But that's basically. If you just have any question, just send it to me. And your network, you need to fix your network. You need to fix your network. Your network is not really giving you that good idea to start being in the market. I mean, to have the class.